Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Thursday. It's been a long week. We got one more day till Memorial Day weekend. And I have a lot of requests for songs to get you guys in the mood for the recap. So I'm going to give you a little something that I think that might bring a smile to your face. I love this guy. I don't know if you've watched The End of The Voice. How about I show you some charts with a little background music? You guys want to do that? All right, Freddie, I want you to lower the music a little bit so then they can hear me talk a little bit. All right. You could dance a little bit if you're watching the recap. Have a little beverage. It's Thursday. We're getting into the summertime. All right. So here we are. Again, the end of the week. We've had pretty much a grindy type, choppy situation in the S&P, but I'll be honest, I kind of like that a little bit better. I don't like when the Dow's up 240 points by 942 and you can't see where the relative strength is, you can't see where the relative weakness is, and at least here you can be stock specific. If we want to give a little bit of State of the Union on where we are, take a look at the chart of the SPX. Go to the chart right now. You know, a lot of people are saying there's low volume, the transports are weak, blah, 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 blah. All in all, you know, you look at the chart here, what do you see? You get rid of all the background noise, get rid of all the pundits, and all I see is the S&P breaking above a prior resistance, right? Breaking above and flagging. Did it fall apart? Did it break down? No. Did it digest and let the 8-day catch up? Okay, after a big move that we saw when it broke above this 2117 when I actually left for Florida, you know, that's pretty much what you saw. And here we are. So we'll see what happens with the long weekend with Janet Yellen speaking tomorrow. Maybe we break above 2134, make new highs just for the weekend headlines. But we'll see. All you know now is that you have a new floor above 2120. We didn't have a breakout failure. Tomorrow, if we open lower and it's a trap, all the bears are saying it's going to be a trap. Okay, you can't trade like that. You got to say, this is what I'm seeing here. Breakout, consolidation, maybe it continues. Okay, which is the interesting part because, you know, we look at charts and in the background we have the noise. And I know one of the focuses I had this week, which, you know, I wish I could have played a little bit better, you know, it was BABA. A lot of guys made really big money in BABA. And if you drowned out the noise of the Gucci counterfeit friggin' lawsuit, as well as big hedge fund guys selling BABA, which was the weekend headlines, while I was in Florida doing a friggin' 100-mile race with my cousin. I'm running 30 miles. I check on my phone and I see people tweeting me, oh, you have a lot of BABA. Did you see the news on Gucci? Did you see the news about Dan Loeb selling? I'm like, really, guys? I'm trying to play a breakout here. It has a big gap up. It broke the descending channel. You look at the chart, and it really looked good. Okay, you go back to right here, which is right before I left. I think this was right there. So technically, you had every ingredient for a breakout. It broke above a descending channel. So that means anyone that was shorting versus descending channel, they made a lot of money, said, ooh, I might have to switch gears. You also had a pro gap on earnings, so it proved it had some earnings power, and a sideways flag. So as a swing trade, what it should have been is just long tier 1 versus this. That was the stop, 84.91. You could have even been long versus this 86. So, you know, I left. I'm like, okay, you know, we broke above 2117. I want to be in some longs. I had 8 positions on the VTF. Apple was my biggest and BABA was my biggest. And besides Citigroup, I had the dollar at the time. I don't even, compliance-wise, I can't say all my positions because I don't know exactly. But anyway, this was one of my biggest ones in my swing and my active account. So when I saw all the news, I'm like, damn, I can't believe I got to deal with this again. You know, I got KM in my grill talking about how bad it is and this and that. So anyway, you go back to the chart. So, you know, on this move after that, you know, I got out of half. But what really happened here? I know you had the news. I know you had the hoopla all day long on CNBC. All they talked about it was BABA and counterfeit and blah, blah, blah. And meanwhile, it didn't break this and it didn't break that. And then the next day, it broke below it by a second. Then you had the news with Yahoo about, you know, the IRS filing or whatever it was. So right here, coming into this day, I remember doing the recap. I'm like, all right, guys, I got out of the trade. It got me. You know, my history with it in this little grindy period down has not been great. But if we do get back above 89, I'm going to be back in it. But if you were in it for a swing and your rule was this was your stop, none of that all mattered. None of the news, none of the naysay, none of the jibber jabber. That was your stop, and you never got stopped out. If you're playing it for momentum, okay, boom. There you go. That's your momentum trade. So now you're in tier 2. Tier 1, tier 2. Next spot for a potential trade was to see, can he get in this gap? And if it gets in the gap, probably fills a decent portion of it to here, or maybe entirety. Okay, so day 1, day 2, and then this happened. Pow. Okay, I was long overnight, got rid of most of it in the morning, and now I'm flat baba, but there's your 3-day move. Okay, get rid of the noise, get rid of the headlines, get rid of everyone's talk. Technically, broke the descending channel, sideways for a swing tier, momentum tier, follow through, you're out. Now we see what's next. So it just goes to show you how you have to tune out the noise. Look at the technicals, look at the charts. That'll be your guide. Okay, and then let's just go through other charts and see what's cooking here. I have a bunch of positions. Apple, I still think is acting very well. Held support here, going sideways. This is when I put my swing back on, when it broke above this 127.60. Today it cleared this 131, and now we'll see if it makes its way back to the highs. All right, with option expiration tomorrow, I'm not sure if it wants to strike a 130. Who knows? Maybe there's enough strength for it to blow out vol and get back to the highs. Overall, though, nice trade from here. Tier 1, Tier 2, trim and trail, above the 8-day now, above the 21-day, trending really nicely. Amazon broke this descending channel, didn't close great, but still looks good. Here's your descending channel, had a little bit of a bigger move. It just stays above this, and it can continue and potentially take that out for next. Okay, you look at Google, hasn't been easy. This actually just reclaimed the 200-day for the first time. If you're in it, try and trail it. It's a laggard, but breaking above this lower pivot, the 13F filings have a lot of hedge fund guys increasing their position. Maybe they think there's some kind of capital return. If you want to be in this, perhaps it makes its way back to the resistance here, but just you have to have a thesis for Google, which I don't have. Then go back to the sectors. You have the spiders holding highs, and then you have the transports on lows. Okay, railroads. Okay, I don't know who takes the railroads anymore, but anyway, the airlines, which I put in back in my note today, we were looking to see if there was some kind of red dog reversal because a lot of people got hurt catching a falling knife yesterday because it didn't stop falling, and that's not what you do as a trader. That's how you blow up. So today I listed all the low pivots for some of the airlines, and they still look a little dangerous. Okay, first of all, you look at Delta. Just so people like, what could you have seen? Look right there. Okay, you have a bull flag type pattern above resistance right here. I'm sorry. Let's go back to this. And as a technician, you got to look for your signals. And looked as if it was holding here. If you were long here, okay. But then on the day that oil was getting hit, this got crushed. Outside day, get the hell out of Dodge, and then boom. Got rid of all the moving averages. You should have been out as an active trader, and chances are it doesn't even hold as a swing trade. But you look here, there was a red dog reversal. What is a red dog reversal? Traded below the prior low of 43.16, put a low in at 42.69. So what is that, like 50-cent risk, and gave you a decent trade. If you're looking for follow through, maybe you hold the third to see. But I'd be a little skeptical because you look at something like UAL. I know it's weaker, but not only did you have an outside day right here, okay, which same thing if you were playing for a potential move above this, okay, this changed on this session. Why did it change? Because look at that engulfing bar, engulfed this range, that took this off the table, that gets you out. And then it sliced through the 200-day, didn't hold the 200-day, and then today I actually traded this for a little bit of a bounce, made some money, but had no continuation. So if United Airlines could get crushed below the 200-day, just be a tiny bit careful, with this one-day bounce in Delta. And then if you look at JetBlue, I know it's showing relative strength, which is great, but if all the airlines are in kind of trouble here, this trend from the lows is somewhat in jeopardy. So just be a bit careful. It's broke the 8 and 21 days, so as an active trader, you probably should have been out right here in JetBlue with your first signal right there. and now chances are it might even continue to the downside. So I'd be a little careful there. So the airlines don't look like where the easy money is. You want to be where things have some kind of continuity. And then as far as, like I said, the IWM, it's trying to repair. We'll see what happens here. It's above the 8 and 21 day. As long as it stays above 124.30, it looks fair. There was a nice trade there. Then you have the MDY, looks even better than mid caps. What do you have here? It's trying to hold the prior highs. It broke above it. It's actually even stronger than the IWM. So as long as it stays above this, it's above all the moving averages, there's chances it can continue. Then you go back into other names. SHAK, what a move. Okay, I had this listed in Twitter here when it broke above the prior IPO high. And look at that move thereafter. Nice trade right here. And then it gave you even another trade above this pivot. Wow. 2 days into that. If you're long it, congratulations. Hopefully you trimmed a little bit. If you're short it, you've been fighting a trend. Momentum names, new issues that follow the 8 and 21 day, you do not short. Okay, I'm actually in this HABT right now, which I do think looks good. If you take out this small, just overthrow move, it's coming right back to its prior IPO high. I tweeted about it right there. I'm in from about 38. We'll see if it could break above this 40 and continue. I think that looks pretty good. FEYE, in my opinion, also looks pretty good. I had it in my 2015 thesis where it broke above this pivot right here. And now it seems as if it's trying to get ready to go again. It's going to take a lot of volume to break above this, but this looks like it's in the cards to do so. So maybe above this 44, it gets back to highs. CYBR also looks pretty good. It's had a big move. I had it listed here and made a nice move, and now it seems like it's working its way back to the highs. It's a new issue, not a lot of memories, above the 8 and 21 day moving average. So when things are above the 8 and 21 day moving averages, they look better. You don't try and just fade it and short it. It's above it. Cleared this, closed near highs, so something that looks better than worse. What else? Banks look okay, but need a little bit of a rest. I started talking about Goldman Sachs being a leader when it broke above this. Still looks good. It's holding above it. As long as it stays above the prior breakout, looks like it can continue. JP Morgan's been riding the 8 day. Held it again here. So if you've been buying it the whole time around the 8 day, you're doing real well with JP Morgan, working its way up. Even Bank of America, ever since clearing this descending channel right there, and then taking back the 200 day, it's acting well. I think that this actually has some more upside. The news flow around this is getting a little bit better, so see if that continues. Facebook, Facebook, if you got out of it when it had this little breakout failure here, you had the luxury of buying it back there, and it's trying to flag once again. So if it could flag here and continue to hold around this area, maybe there's another trade above 81. The other social media names don't look so good, but this one looks like it's still in the game. And it's not a perfect market. It hasn't been a perfect market in a long time. If you've been shorting the market for lack of volume, then you've probably been put out of business unless all you do is use ink and you just talk about trading and you don't trade yourself. There have been spots to be short, obviously stocks, but I'm saying overall in the market. We've been on a 5-6 year run, and in the 6 year bull market, you definitely lack a little power. But it doesn't mean you could blindly short. The same way you can't blindly, be long, because as you can see, all sectors are created different. That's why we say if we're above the 8 and 21 day in the sector that you're trading, look for swing positions. If you're below it, try and be neutral and be more tactical. Same goes for this, the S&P. And then as far as stock-specific trades, there's been a lot of them, and you have to just be careful and be in the right place and have your prep, which is why Redler All Access has a full note that I put out every day, Monday through Thursday. Hopefully you remember that. And then I try and do my best to, put things on Twitter to keep everyone in the loop of what's going on overall and where my attention is. But again, one guy, 2 hands, 7 screens, 2 devices. It's not that easy to do. That's why you have the virtual trade floor that watches my trades live. Whenever I put something on, it shows it. When I take it off, it shows it. And then I'm also on a radio talking because, again, I can't type and look and process and execute all at the same time. And hopefully you're having some success because there's been things to do. They haven't been so easy, as you could see with Baba. Like, the computers know how to take you to the wit's end, but overall, drowning out the noise is best. And having your system and process to follow has been profitable and makes a lot of sense. And what you have to do also is you have to have some kind of balance system, because we're heading into the summer. And if you think the volume's light now and the action is very spotty, it gets a lot worse over the summer. So you want to have some hobbies, so to keep you away from the computer, so this way you're not just over trading and getting involved in things that don't need to have your involvement. So what I typically do over the summer is, you get prepared, you get your game plan. By 11:30, you hopefully executed, made some cash flow. Maybe you're in some positions that you've been swinging that you like. You put your stops in and then go enjoy your day. Come back around 2:30, watch the close, get in some different positions that have volume, that have good setups, and then go through to the next day. But the last thing you want to do is be in front of your computer all day long. You could have the right idea and trade it 10 times when it's not supposed to be traded, get so frustrated, and then when it happens, you don't do it. That's happened to me. I'm sure it's happened to you. It happens a lot over the summer. So we'll see what's next. Janet speaks tomorrow. Markets are hovering. Things are on the move. I'll be in Short Hills. I'll be on the radio. Hopefully, we'll find some more trades. Watch the VTF. I have some positions. Redler All Access. Tomorrow note is a smaller one. Monday through Thursday is a bigger one. And I wish everyone a great Memorial Day weekend. On that note, I'd like to go out, with a little positivity, because I want to finish this little song. I like Adam Levine. I also suggest a little fitness. Get out there, get on the trails, get in the ocean, get on a lake. Do some things to make your heart rate go up. Just sweat a little bit, makes you feel good. And I would say approach life with the glass half full, because it's too damn short, and the last thing you want to be doing is wishing for bad news. Nobody wants it. No need to go through life that way. Have a great weekend.